I think everybody anticipated this pickup in services inflation. There was something very strange going on with airfares around Christmas. Again, not something the Bank of England's focused on, neither the private school fees, neither food. Food was really shot higher in January. Not really clear why that was. Strip all of that out, I think the story is getting better. So we talk about core services inflation, where you take out the noisy stuff, maybe take out rents as well. Rental growth's been pretty intense in the UK. Again, the Bank of England is not so focused on that. The news is getting better. That sort of core services view is coming down slowly.
Is that the right take from the Bank of England, not to be so concerned about rents?
I think so. I mean, I suppose the question they ask is, does it tell us something about the underlying health of the economy? I think why rental growth has been so strong, it tells us more about structural shifts in the rental market, fewer landlords, COVID clearly created a lot of distortions. So I think, does it tell us what's going to happen to, things like wages, the labour market, all of that sort of stuff? Maybe not.
Well, so on that note, wage growth did accelerate at the end of last year. Employment figures were positively revised in December. But on the other hand, if you look at PMIs, the indication is that we're going to see employers cut back on employees as they prepare for budget tax increases in April. So putting all of that together, what do you think of the health of the labour market? Because that is important to the Bank of England.
Yeah, this is the major uncertainty right now. We had Catherine Mann, the Bank of England official, 2 weeks ago, voting for that 50 basis point rate cut, talking about non-linear falls in employment. I don't think we're there yet. If you look at the jobs numbers yesterday, as you said, the sort of payroll-based numbers weren't so bad. Vacancies, though, are well below pre-COVID levels in key sectors like hospitality. That should be dragging wage growth lower. I think it's still a bit of an unknown where we land in April after those tax hikes. The PMIs, as you say, are bad, but redundancies are still pretty low. It's a puzzle.
Okay, it's a puzzle. A tricky one for the Bank of England. And what did you make of the growth numbers that surprised positively? We had GDP actually tick higher, but it sounds like Bailey's been trying to play that down. And clearly GDP is somewhat backward looking.
Yeah, and it wasn't great, right? 0.1% growth. Yes, it was better than everybody expected, but it was still weaker than everybody had expected just 2 or 3 months earlier. I think we're still looking at better growth numbers this year, just by virtue of the fact that the government's going to spend so much money. Yes, we're getting the tax hikes coming through, but the spending increases are much bigger. So whichever way you cut it, that will lift growth this year, with the major caveat of the jobs market. What happens there is going to be key.
Well, let's talk about the spending picture. Keir Starmer came out earlier this week pledging to put UK or British troops on the ground in Ukraine, spend more from a defense perspective if they can get a backstop from the US. And we can put aside what he's trying to achieve from a geopolitical strategic perspective. But just in terms of the fiscal picture in the UK, the fiscal picture is already extremely tight. Does the UK actually have the financial firepower to deliver on those promises?
I think taxes are going to have to go up again. Probably not in the spring statement. The big story there is that the Chancellor's fiscal headroom, the money left over under the fiscal rules, that's all gone because market rates are higher. Now, that's actually not too difficult to recover. You can kind of play around with the future spending assumptions and make the numbers add up. But nevertheless, the true picture is pretty challenging for the Chancellor. I think as we get into the autumn, defence is one thing. Public sector spending more generally is probably going to have to go up again after this next fiscal year. I think the only way you square that circle is higher taxes.
How do they get away with that from a political perspective?
I think very difficult, right? Particularly given that Labour has said they're not going to raise, the key taxes, income tax, national insurance and employees. Clearly, the national insurance hike on employers is being quite painful. But, if you circle back, actually, social security or national insurance for employees is actually still quite a lot lower than the rest of Europe. I think that could actually happen again if it's not a complete disaster in April.
That's a difficult